according to the election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you're having a wonderful day. I got another quick watch list for you, and today we are going to focus on the next volatility indicator. The Fed did raise rates today. We got a quarter-point increase. There was a lot of craziness in the market, but now the Fed futures, you may have heard about this. We have a lot of videos on it. I'll post the link up here. You should go watch this video, but now today it has a new meaning, and I think this is going to give us our new signal here in the next coming days, and it's really going to say, hey, are we going to get more volatility or not? So I'm going to go over this. That's where we're going to, I'm just giving you the little teaser, but today was probably one of the craziest days that we've seen. Literally, the open was like 20 green candles in a row. It was looking nice, and pretty much we gapped up off of reports that the Kremlin was saying that peace talks were going pretty good, and then in the morning, Zelensky, he addressed the Congress of the United States. He was asking for a no-fly zone, and then Biden later decided to give him drones and other weapons. But for the first half of the day, there was a lot of like peace talk news, the Russian statements, what the Kremlin was saying, a Financial Times report, and then it essentially ended up being that it wasn't really a development. They were saying that they had peace talks, and then apparently Ukraine rejected it and all of that. And then by the time Biden announced that they're giving more assistance, a lot of it didn't make sense. And then the market finally cooled down, and then we got Powell. They announced the rate hikes. Things went down, but right when Powell started talking, I literally, I think 6 or 7 minutes in, that is where everything went crazy. So there was a couple of main points with the Fed. I'm going to go over the plays here in a little bit, but as far as the Fed, this is going to relate to this volatility indicator. Again, from the beginning of the year, we were expecting a lot about when is the Fed going to start raising rates. Once they start raising rates, they're going to start doing the balance sheet reduction. So a lot of people were worried about that. And then now the Russia, Ukraine, and all of that, and then inflation, 7.9, commodities, a lot of crazy stuff. But today, it wasn't bad, but it was definitely hawkish. Literally, the Fed sent a message today, and it was that they are willing, or now they are, on top of inflation. I know that is hard to say because a quarter basis point doesn't seem like much, but the fact is, now that they've raised and kind of the plan that was laid forward, again, this is where this volatility indicator in the Fed futures comes up. But what this is saying is that now at each of these meetings, we are going to be getting one rate hike. So this is where the Fed futures comes into play, because if they have to hike at every meeting and then they're expecting a target rate, well, that means there might be a double rate hike somewhere in between. So that's what we need to talk about if you want the quick points from the Fed. Everything was pretty much expected. We got the rate hike, but the thing that wasn't is the Fed's new dot plot, and this is now them matching up with the market. And they also did release economic projections and then inflation expectations, but now their inflation expectations for this year are 4.6, and I think it was below 3% last time. But now the median dot plot, it is showing that most of the Fed thinks that we should be raising and raising to a point where it's literally matched up with the market. Again, to remember how this year played out, don't forget, we started freaking out beginning of the year. This was when we had the Fed minutes. People were talking about tapering, rate hike, all of that. Before we had any Russia drama, we were freaking out about inflation and how the Fed is going to move, and this was all related to the Fed futures. That's the first video we made about this, and you could see it. The Fed futures led the way, but everybody was tripping out because the market was pricing in more expectations and more hikes than the Fed was, and that is what changed today. Pretty much now the Fed is caught up with the market, and this is now the next question. So there was that. Powell also said, he made it very clear that he does not see a recession in the near term, and they made no decision about the balance sheet reduction yet. However, we do expect him to be talking about it next meeting, and that is May. So this brings us now to the main point I wanted to talk about. May is the next Fed meeting, and what is important and what will be a volatility indicator is essentially if the Fed futures leads the way. Now, that might not make sense to all of you, but one thing that will make sense is that there is no Fed meeting in April, but the current market, and now based on the Fed futures and the whole plot and everything that they explained, if they are going to meet this goal of 7 rate hikes and get to this like target rate around 1.8, 1.9, that means they are going to have a double hike. And now April, we don't have anything, but May is now pricing in a double hike, and this is now what I think the market is going to freak out on. So if you remember this, and some of you may ask, how do you get this chart? You could search the Fed rate monitor tool. It'll bring you investing.com. And now what this is showing you is that the odds of a double hike right now are 55. Literally yesterday, it was at 2%. So we had a lot of things happen today. Again, even the China stocks bounced. I forgot to mention that. They literally announced like unprecedented stimulus, but they didn't announce anything. It was the wording, and they pretty much were pledging that they were going to fall back from that crackdown stuff. So a lot of things were driving the market up today, but you could see here on the Fed futures, after Powell spoke, the odds of a double hike, they have surged. So this is what we saw the last time, and remember, this shot down, the market did its thing, and eventually it reacted, and pretty much that is what I'm expecting to happen this time around. And now this is the volatility indicator. The higher this probability goes up, there's 2 charts here. If you look at the actual future, you could see it's pricing in 0.695. 0.75 would mean there's a double rate hike. So if it gets there, stays there, and goes higher, that's one thing to monitor, and that's what we mean. It's a very easy thing to watch. If you have the ability to pull up these futures, if this chart goes down, that is pretty much going to lead the market. If that goes down, it is bearish. If it goes up, it is bullish. But now, if you want to use this right here, the Fed rate monitor tool, what this is showing you, remember, same thing happened here in March. As long as this number stays above 60% by May, then you're guaranteed to have a double hike. But I wouldn't be surprised in the next couple days if this probability goes higher. Last time when we were dealing with March in the beginning of this year, this thing went up as high as like 90% on the March contract. So this can move a lot, and I really think this is going to be the big thing. But if we start pricing in 0.75, I think this may be the next thing the market reacts to, because again, a lot of what we got today, it was hawkish, but the bullish part that you could get out of all of it is now the Fed and the market are on the same page. So it's not as if we have this big divergence between what the market is pricing in and what the Fed is going to be doing. So some people could see that as bullish, but now if the market starts to price even more aggressively, well, that may very well be the second wave. Maybe we were a little bit premature. So hopefully this makes sense. Let me know if you guys have any questions on it. I will answer them there in the comments. And then to final it up with the plays here, I only have 2 that I'm really looking at for tomorrow that I like. I did make a play on the FXI, or I sold out of these. Remember, this was a play we made a couple of days ago. I sold out 2 of them for 50 cents. I got 100% on it, but these plays got clapped. It was the China one, but if this squeeze continues tomorrow, I mean, I would definitely watch them, because usually when you get one of these green shoots, it doesn't really last for 2 days. So we will see what happens, but that was the first play. And then at the end of the day, I did make one more play on Lockheed Martin. I decided to go with a June 5/10 call, and I spent about $340, so a little bit expensive, but you could see here, it's kind of coming back to the levels since everything happened. Lockheed, they got absolutely clapped today, and they did lose a contract, and then they gained another one. It did have an offset, but pretty much I'm thinking if there's more escalation, this thing will go, but now they're kind of getting to a cheaper price. They have a lot of time, so we will see what happens. And then finally, JP Morgan, those bank plays that we had yesterday, this one went up almost 100%. I'm still riding it out, even though TLT went up, and now we got to talk about that. Yes, people are talking about the yield curve. There is an inversion on, I think, the 5 and the 10 right now, but it's not a full inversion just yet. And that's one thing that even surprised me here today, was the fact that TLT went up and the bank stocks were actually able to do good. Again, we were saying if TLT goes up too much, that's not a good sign. And you saw the bank stocks get a little bit of strength there when TLT was dropping. So that's the part I'm worried about. But in general, I'm going to be watching the banks. The JP Morgan, I'm still riding out. And then the Wells Fargo, I'm bringing this up because I might double dip. They did good, not as good as JP Morgan, but this play held up. So tomorrow, I'm going to look at the premiums. If they got deals on closer to the money, I think I'm going to go with them. If the banks could continue this trend, it will be good. But now we also got to see, does the market start freaking out if we start pricing in a double hike for May? And a lot of attention is going to be there. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet on. I need you to remember, baby. You got to root for everybody. But the code loves you. All of you. I'll see you in the morning. Let's go.